Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 24th of July. This will be the last video that we do for the week as I am off to softball tournament with my daughter this week. Let's run through what is happening in markets today or what happened in markets today. It was a pretty quiet day, I'll have to say, as we get into the end of July here. Canola was down $2.40 at 695.70. Minneapolis wheat was down almost 3 cents at 606.75. Again, very close to testing that support at 605. Kansas was up a nickel at 528 and a half. Chicago was up a cent at 541 and a half. Soybeans up 1.5 cents at 1024 and a quarter. Bean oil up half a cent at 56.34. Corn was up 3.25 cents today at 401.75. The Canadian dollar slipped a little bit, 73.25. Slipped 3 tenths of a cent. Live cattle down a little bit, 135 a hundredweight to 222.15. Feeder cattle down 262 a hundredweight at 328.90. All right, I'm just gonna talk about a couple charts here that I find interesting today. And leave the rest out. I think this Minneapolis wheat, or a couple of charts here that I've been watching, or that I think you should be watching. Here's Minneapolis wheat again. It's testing that support. It doesn't seem to want to bounce off it very aggressively yet. That does concern me. I think if you've been watching these videos and you've been reading our commentary over the last little while, I am expecting this 605 support to hold, but I could be wrong. And if I am, then it could break that 605. It definitely is having trouble rallying off this point, at least at this time. But it is also hard to make a case to sell wheat with a 5 in the front of it. So, or Minneapolis wheat specifically with a 5 in the front of it. So, I guess we're still thinking that, based on fundamentals and on technicals, that we could see a bounce in December Minneapolis wheat here. December soybean oil continued. It did make a new high last week. It struggled to do that again this week, but we're still trading very much inside of an upward trending pattern. As you can see, the 20-day moving average here, which I'll point out to you, it did kind of level off here for a little bit after this, after the double limit up day, leveled off. It's starting to climb again. That looks good from a bullish perspective. Who knows when this will get exhausted? It kind of has been trading relatively range bound since that EPA announcement. So it definitely is taking its time if it wants to rally even further. I know some analysts are looking at another push in December soybean oil based on that biofuels demand that's coming in. That is yet to be seen, I guess. December soybean meal, I think, is worth looking at as well. I think it seems to have taken a turn for the worse here, has had trouble significantly moving above this 20-day moving average, and today took a bit of a spill down to 281 today. It did almost get up to it did get up to 290 and above yesterday. So we could see another push back down to these previous lows down here at about 278 or so. So that's something to watch. Soybean meal, of course, meal makes up 80% of the soybean, so that could put a little bit of pressure on meal, although the oil share of the soybean crush has been hovering, somewhere between 45 and 50%, which is very high. So the oil may actually make a bigger difference on the price of soybeans than meal at this point, but it's always worth pointing out. All right, let's get into Canadian exports, or at least Canadian Grain Commission data that was released today. We're getting now close to the end of the year here for this data, and it's telling some interesting stories. Here's weekly canola cumulative exports. Now, this has reached 9.27 million tons of exports versus last year's 6.59. So, as far as exports go, canola is doing extremely well this year. We've been exporting a lot, we've been crushing a lot. So the demand for canola has been really, really strong. Of course, a lot of our canola exports go to China. A lot of our oil and meal goes to the US. So both of those have been performing really well ahead of average and significantly above that of last year. Again, last year was 6.6 million tons at this time of year. This year is 9.3, and I'm rounding here a little bit, but excellent performance on the exports. We've actually saw a big push higher in this last in week 50, so we got 2 weeks left to report. And I mean, sometimes big numbers like this, it just means that the licensed dealers are getting caught up on paperwork. But needless to say, if that's not the case, it probably brings up the last couple of weeks, which looked pretty dismal for exports. So there was being, or it could be mean that there was a bit of a buildup happening, ready in order to get these exports off. So there was 202,000 tons of exports this week, which if this was not a paperwork thing, then that's well ahead of average at this time of year, when normally we see it fall off quite considerably. Here's canola weekly deliveries. They've actually still been relatively weak, meaning that the process elevators, or the elevator system in general, is not necessarily replacing everything that they're taking out. So there's 310,000 tons of deliveries this week, which is still below average, and has been again for the last few weeks. Here's producer deliveries into process facilities. Now this is just segregated out um, for crush. So there's 166,000 tons delivered into the crush facilities in week 50, which is pretty good. It's about an average, a little bit less than last year. But given if you ask anybody, canola is there's no canola in any bins. I mean, this obviously isn't true, particularly if we've seen 200,000 delivered in this last week. There's somebody that still has canola in the bin. There's always somebody that still has canola in the bin, but I can see that it's probably more like bin bottoms and the last of it kind of thing. So it feels tighter than what it might actually be. But that's we're still seeing strong deliveries into process facilities, which means we're still seeing strong demand there. I also wanted to kind of point out stocks in commercial positions. This is one of the things that we use in order to calculate our ending stocks for the year. So when we look at ending stocks, when we try to predict what Statistics Canada is going to say for ending stocks, we look at the March the March stocks that they reported last. We look at producer deliveries. We look at stocks in commercial positions. Um, and we look at exports and all of those things. So this gives us a little bit of a clue. The average amount of stocks that we see in commercial positions, for example, is about 1.1 million tons. I've always used a million as my guideline, but I guess average is a little over that at 1.1. Last year, we actually saw a huge amount of stocks in commercial positions at 1.6 million tons. This year looks to be a little closer to average at about 1.2, or a little bit less than 1.2. So, I mean, we could probably figure that the commercial positions are, one 1.1 to 1.2 million tons at the end of the year, which means that whatever's left in farm bins is what is added in order to get in order to get what is the total carryout for the year. So again, I would say it probably looks somewhere in the range of 1.7 to 1.8 million tons for ending stocks coming out of this crop year. Let's move on to wheat here. Wheat cumulative exports is now over 20 million tons. That is well ahead of, or pretty well ahead of average, and significantly ahead of last year at this time. So again, wheat exports are really working well for us. We've been executing well on our two largest crops as far as exports go, which is really great to see. Here's what that looks like again from a weekly perspective. And here's where, weekly exports also saw a big run up in week 50. So again, that kind of leads me to think that the licensed dealers or the licensed facilities were maybe a little backlogged on their paperwork, and this is just showing in week 50 at this point. So it might have been smoothed out over the last couple of weeks, for example, because it is hard to understand that there would be a huge export week in week 50 for both wheat and for canola. It probably is a paperwork catch-up thing to some degree. Looking at dry peas, not something we talk about a lot, but peas aren't necessarily acting like we would like them to. we saw 1.75 million tons of cumulative exports so far. I think this was like, let's see, I think I have this. Yeah, 11,000 tons was exported this week. That's week 50 right here. We're pretty much on average. You can see that the big export pushes earlier in the crop year. Then we get through, after Christmas and into spring, we have some, but it really trails off. But so that doesn't give us a lot of confidence that we're going to see a significant difference in exports year, into the end of the crop year. And our estimates are below average here. Moving on to barley here, just to kind of finish up here. We haven't seen any barley exports in the last month. We are tracking significantly lower than average and significantly lower than last year for barley. So it has been a challenging year for barley. That's 1.8 million tons this year of exports. Last year we had 2.45 with the average at just a little less than 2.2. So that's where we're at for barley at this point. If you like this kind of stuff, subscribe to our YouTube channel. There should be a subscribe button just at the top of our YouTube page here. We really appreciate it. We appreciate all the comments. We appreciate the new subscribers to our premium content as well. To get that premium content, go to CanadianAgMarkets.com and click on the subscribe link up here. That again will take you to our subscribe page, which I'm having trouble getting to at this point. It'll take you to our subscribe page here. You can subscribe here and it will take you to the payment info, and we'll get you taken care of. Again, that's $99 a month. So less than $1,200 a year. You get all of our weekly reports, all of our morning reports, and all of our ad hoc reports after important stuff happens in the marketplace. And you get it before anybody else does, and before it hits this video feed. So make sure you are subscribe to our premium content if you want to get the best Canadian analysis that is out there. All right. Again, we won't be here tomorrow, but we will see you on Monday. Have a great day and have a great weekend.